Intuitive Surgical have been rallying now again for a year straight, put in a fresh new high today with the big pop. George Tsilis taking a look at the medical devices business for us. George, the first big high this company hit was in 2021. Then it pulled back for about a year and a half, recovered, and the last 52 weeks has just been going ballistic again. What's going on?
Well, I think you look at ISRG's market share in the robotic surgery space. They have about 80%, particularly domestically. So they have a near monopoly, if you will, in that particular realm of robotic surgery. And one of the things that's going on with the business is that they continue to expand not just the installed units, which are around 86 to 8,700 right now. It really comes down to all of the analytics, data, and training that the company provides the doctors and surgeons who use their underlying products. So, one of the things about their business is there's essentially high switching costs. Once there's been surgeons trained on their devices, one, there's not a lot of competition that matches them, and two, it's difficult to even allow competitors entry into this marketplace because doctors need to be retrained on a completely different device and software. So with that said, the company really has a durable competitive advantage. There has been some challenges, and particularly when you look at some of the multiples going back to the years in mention, and that also correspond the decline that we saw in 21 and 22 with the overall bear market. But this company has always traded at a high multiple, and if you look at the news today, obviously it's breaking up to new 52-week highs, but this is the time of the year where we have many healthcare and biotech conferences, and so the JP Morgan Healthcare Conference is the place where there's a lot of activity and action, and of course, new development devices brought to market, and of course also are included our updates to earnings and sales. And that's really what happened today with the ISRG. It wasn't a change in technologies or a new innovation. They essentially increased their guidance for Q4 of 2024. They're going to be reporting on the 23rd of this month, so in about 10 days or so. But they increased their guidance to $2.41 billion versus $2.2 billion prior estimates. So that's about 25% higher than last year. And of course, at the same time, they reaffirmed guidance for the fiscal year higher by about 17% for the full year. And so one of the things you got to keep in mind with this business is irrespective of the fact that as the price is moving higher, the earnings continue to move higher. Just to give you some context, if you look at the earnings estimates for fiscal year 25. So they'll be reporting the end of 2024 coming up and then in the end of this month or on the 23rd. But they continue to increase the guidance, and now it's about $7.86. And that's, again, 20 cents higher than where it was about 60 days ago. But it's still trading around 60 times forward earnings. But it's always really traded at these higher multiples just because of the market share and the durable competitive advantage the company commands.
Okay. It seems like there's two sides of this coin. Fortunately, this is a really amazing tech that saves a lot of lives. Unfortunately, it also seems that there's a greater demand for it with life expectancies that have come under pressure basically since COVID, and cancer rates that have, even though we've got survival rates that are going up, the incident rate of cancer is higher. Also the market share too, it's just nobody can basically do what they do. And for all the talk about kind of like hypothetical AI and robotics and stuff, this is kind of like the OG, like real, robotic utility in the hospital workspace.
Currently, yeah. At the end of the day, there's some great innovations that are expected to manifest in the healthcare space. Preventative diseases, even small injectable robotics in your body that can, hunt down cancer cells. I'm just giving you an example of some of the things that I've seen. But nonetheless, right now, ISRG is essentially with their Da Vinci machines is the go-to technology here, at least in the United States. And so with that said, they've got steady earnings growth, and you want to see essentially what the company is telling us. If you look at the unit growth of the total installations, it's around the mid-teens area. And if sales growth, just for the quarter they're about to report, 25%, full year 17%, So it gives you an idea that they're generating the more sales from consumables, and that's where there's higher margins. It's not necessarily I believe about $1.5 million for the installed units. It really comes down to the recurring revenues from, training, software updates, as well as, again, the consumables portion of the surgery that is used in their procedures. But the company itself, like I said, has a great durable competitive advantage, and they continue to increase the earnings growth relative to sales growth. So if you want to see those markers continue to trend higher, and that's the case for Da Vinci, but at the same time, 60 times earnings on a forward basis, that's right where it is on a 5-year average, but it may justifiably be there just because of the durable competitive advantage this company has in and of itself.
All right. Okay. George, good report.